Hi, this is John Graham. I'm a finance professor at Duke University's Fuqua School of Business, and I'm the director of the Global Business Outlook, which is a survey we do each quarter of chief financial officers all around the world. We do the survey jointly with CFO magazine, and this is the 66th consecutive quarter that we've done the survey. Our partners in Latin America are FGV, and our partners in Europe, Tilburg University. Now this quarter we had 1,500 CFOs respond, about 900 from the US and approximately 600 spread between Asia, Europe, and Latin America. Let me start by telling you about some of the US results, and then I'll bring the other regions of the world in for context. So things are looking a little bit slower now in the US. We see the optimism index has come down. The optimism index is on a scale from 0 to 100, and optimism fell to 52 this quarter, from 56 last quarter and 59 the quarter before that. The long run average is about 59, and so down at 52, we're kind of heading in the wrong direction and also at a relatively low level. Still higher than we were during the recession, but nonetheless at a lower level. Business spending or capital expenditures will increase by about 3.5% over the next year. That's down from the number we heard last quarter, which is unfortunate because business spending has been one of the strengths of our recovery over the last few years. Number of employees will actually increase by about 1.5%. So that's actually slightly good news still. Now keep in mind, the labor force grows every year in the US, so just to keep up with labor force growth, we need to have about 1 or 1.2% growth in number of employees. That would keep the unemployment rate flat. The fact that we'll have 1.5% growth in employees means the unemployment rate might come down a little bit. That assumes that the labor force participation rate stays constant. If people who have been on the sidelines come back into the labor force, then the unemployment rate could even go up a bit over the next year. So that's the situation in the US. Still positive, but a little bit weaker than what we had been hearing. In Asia, the optimism has also fallen, but in this case, it fell to 60. So the optimism had been up in the mid-60s over the previous quarters. Now it's down to about 60, so much higher than in the US, but a little less optimistic than what we had heard. Number of employees should go up by about 3%, which again is twice as fast as in the US, but nonetheless slower growth in employment than we had heard before. Capital spending should go up by about 7% in Asia, which is a reasonably strong number, but again, a little bit down from what we had heard. Wages should go up by about 7% in Asia, which will continue to very slowly shrink the wage gap between Asia and in the West. So overall in Asia, we're seeing slower growth, but still much stronger than in the West. Latin America is very similar to Asia, optimism of 60, employment growth of about 3%. In this case, a little bit softer capital spending growth of only about 3.5–4% capital spending growth in Latin America. I'll circle back and say one more thing about Latin America towards the end. Now, the real trouble is over in Europe, okay? In Europe, we're seeing an optimism index that's fallen below 50. We're going to see employment shrinking, so people are still getting laid off in Europe. And we're going to see capital spending falling by about 5% in Europe over the next year. Now, if you go back to 2008, when the US was in the midst of our severe recession, businesses cut capital spending by about 5%, maybe a little bit more. So that's what's expected in Europe over the next year. So in other words, Europe is mired in a pretty severe recession right now, and it's not clear that the light is yet at the end of the tunnel. We asked the European CFOs what they thought about what's happening in Greece. And 6 out of 10 European CFOs said they expect Greece to drop out of the Eurozone within 1 year. Now, if that happens, it will send some shock waves through the system, at least in the short run. Might be an okay outcome in the long run, but in the short run, we'd have to get over that bump before we can start making progress again. We asked 2 other special questions this quarter that I want to tell you about. But there's many, many more results. If you go out to cfosurvey.org, you can see those other results on your own. The first of these last 2 things I want to tell you about relates to Federal Reserve monetary policy here in the US. Right now, the Federal Reserve is talking about doing another quantitative easing plan, whereby they hope to lower interest rates, or the borrowing rate that companies pay when they borrow debt to do their business spending. So we asked companies, if the Fed was successful and could reduce the interest rates by 1% on the rate at which you borrow, would you increase your business spending? So unfortunately, 91% of companies said no. Even if the Fed could reduce interest rates by 1%, we wouldn't budge our business spending. 9% said yes, they'd spend more, but 91% said no. Now keep in mind, to reduce interest rates by 1% would be quite difficult for the Fed. Even if they can achieve it, most businesses say it's not really going to matter. Even if the Fed reduced interest rates by 2 percentage points, now we have only 16% of companies saying, yes, we would increase business spending. So it doesn't look like monetary policy is going to have much of an effect in the U.S., at least not here in the short run. Now, why is that? Well, 3 reasons, really. 1, interest rates are already so low that getting them a little bit lower really isn't going to matter much. 2, for many businesses, right now there's so much economic uncertainty, demand is weak, they don't really want to do business spending right now, even regardless of interest rates. 3, at the other end of the spectrum, some businesses that are reasonably successful right now, they've also accumulated cash, and they're planning on doing their business spending out of cash anyway. So reducing the interest rate really won't change their business spending. Wrap it all up, and it doesn't look like a big effect of monetary policy anytime soon in the U.S. The final thing I want to tell you about in a little detail relates to the judicial system, the court system, and its effect on businesses. So we asked businesses, does the judicial system provide any kind of risk to your business? 3 out of 10 businesses in the U.S. said yes, the judicial system poses some kind of a business risk, meaning the decisions that come out of the judiciary might hurt the business in the U.S. That was a bit higher than I expected, to be honest, but nonetheless, 30% said yes, there's judicial risk. Likewise, in Europe and in Asia, 30% of CFOs in those regions also said that the judiciary caused some kind of a business risk. Where the numbers are really interesting is in Latin America. 68% of Latin American CFOs said the judiciary causes business risk towards their businesses, okay? Now, what kind of risk are we talking about? We're talking about the types of decisions the courts would make might harm business. We're talking about the process by which decisions are made, and we're also talking about the long delay it takes to even reach a decision in the Latin American courts. So more than half of Latin American CFOs said all 3 of those reasons contribute to the judiciary risk, and nearly half said that just the costs of the judicial system are a problem. So we're seeing, again, last quarter we asked about corruption, how that affects business. This quarter, judicial risk. In both cases, we're seeing Latin America is a region of tremendous potential growth, but there's some basic issues related to governance and the court systems that need to be ironed out before the region can really reach its growth potential. Okay, to wrap up, in the U.S., we're still seeing positive growth, but slower growth, than we had seen in the past. In Asia and in Latin America, we're seeing stronger growth than in the U.S., but again, a little softer than what we had been seeing. In Europe, Europe is in a recession, and it's really not clear where the light is at the end of the tunnel in Europe. We expect to release the next Global Business Outlook on about December 12th, so I hope to talk to you again then.